Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 356 on January the 3rd, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Beyond Meat, Palantir Technologies, and Xpeng Inc. And we discuss three new trades on Tilray Brands, MARA Holdings, and the iShares Trust 20-plus Year Treasury Bond ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Then the markets finished the week slightly lower. The Dow Jones Industrial Average lost 260 points, closing the week at 42,732 points. The S&P 500 index lost 28 points, ending the week at 5,942 points. And now it's time for the topic of the week. The topic of the week is new skills. Now that we're officially in 2025, it's time to consider getting better at what you do. The subtext obviously is about option trading, but this is applicable to any other skill in life. This is the perfect time of the year to set a goal to improve on some skill that really matters to you. Maybe it's option trading, maybe it's playing the piano, maybe it's improving your health. As I said, this is applicable across the board. Now, I'm even going to give you a secret at the end. Now, I like to think in terms of planting seeds and reaping the harvest. What seeds do you need to plant in order to live into the harvest that you truly desire? If you want the harvest of being in better shape, you need to plant the seed of daily exercise and better nutrition. If you want to become a better trader, you might need to take a trading course, read some trading books, and make daily trades until you learn how to consistently be profitable. I want to improve on the piano this year. I need to commit to daily practice and to finding a piano teacher. We sometimes look at the people who have the skills that we desire as if they woke up one day with this expertise. We don't see the hours and hours of practicing. We don't see the money invested and lost along the way. We don't notice until the spotlight shines and they're suddenly experts. That's just not how life works. Even if you want to be an Instagram influencer, there are hundreds of techniques in audio and video editing that might be useful. Don't start this year with a hope and a dream. Make a plan to design a pathway to achieve the improvements that you truly desire. Then discover the art of making a commitment. It feels like a lost art these days, but that's the only thing that will keep you from mediocrity. Make a plan, start planting seeds, keep planting until you get the harvest you want. And now time for the secret that I promised. Just about every skill, one way or another, exists online. Therefore, artificial intelligence actually has access to a lot of that information. So if you like tips on becoming a better piano player, maybe in jazz or something along those lines, on a daily basis, you can actually open up ChatGPT or Claude or whatever your large language model of choice is, and just ask for a daily routine that will allow you to achieve the skill that you want or achieve improvement in that skill. So using AI for a daily routine is the perfect cheat sheet for getting what you want out of this year, 2025. So make it a great year. All right, so that's it for the topic of the week. Let's go ahead and get into the trade review from last week's trades. We're going to start off with a covered call. We looked at Beyond Meat Inc., symbol B as in Bravo, Y as in Yankee, N as in November, D as in Delta. At the time, the stock was trading for $4.08 per share. I looked at buying that stock and selling the January 4.5 call at 22 cents, hoping for a return of 15.69% in 3 weeks. Now, shares of Beyond Meat lost 7 cents, ending the week at $4.01 per share. The call option we sold lost 6 cents, leaving us with a 1 cent loss on the week if we were to close the trade out immediately. The stock has not moved enough for us to consider rolling the option strike lower, and we're still well above our break-even price. So even if the stock were to expire right now at this price, we would walk away with the profit. So no adjustments are needed just yet. You definitely will need to track the stock price over the next 2 weeks just to make sure that all is well on this trade. Next up, we have the credit spread on Palantir Technologies, symbol P as in Papa, L as in Lima, T as in Tango, R as in Romeo. At the time, the stock was trading for $79.08 per share. I looked at selling the January 79.78 put spread at 35 cents. That could give us a maximum possible loss of 65 cents per spread. Shares of Palantir grew 81 cents, ending the week at $79.89 per share. The out-of-the-money put spread that we sold is even more out of the money, which means this trade is a winner so far, so that's great. With the stock price more than $1 above the break-even point, this trade is working out as planned, so no adjustments are needed. Of course, as always, you'll want to make sure that you keep track of the stock, especially over the next 2 weeks, just to make sure that it finishes the way it started and that you actually lock in a profit. And then our last trade from last week was a debit spread on Xpeng Inc., symbol X as in X-ray, P as in Papa, E as in Echo, V as in Victor. At the time, the stock was trading for $12.62 per share. I looked at buying the January 12.5 call spread for 31 cents. That could give us a maximum gain of 19 cents or a return of 61.29% in 3 weeks. Now, shares of Xpeng lost 93 cents, ending the week at $11.69 per share. The in-the-money call spread that we bought is now out of the money, leaving us with a loss on the week, and that sucks. With 2 weeks left until expiration, this trade isn't looking very positive. Our maximum loss is 31 cents, and we can close the trade right now to lock in an 18-cent loss. Now, you could also sell the 12-13 call spread at 23 cents, which would leave you with a credit spread, the 12.5-13 credit spread, and that would actually have it where you lock in an 8-cent loss. But it also opens up the door to the possibility of losing another 50 cents if the stock expired at or above $13 per share. So that's an alteration that just ends in loss. It's just a matter of how much loss you're going to take in. I think the best possibilities right now are either to close this trade out completely or to wait to see if the stock pushes higher over the next 2 weeks. And right now, we are 62 cents below the break-even point. This could certainly get back to positive over the next week or so. So I'm more of a fan of patience than of quick reactions that might lock in more loss. And remember, right from the start, we know how much we could lose on this trade, and that's 31 cents. So putting on and taking on an adjustment that guarantees an 8-cent loss but opens the door, the possibility to losing another 50 cents just isn't a good idea either. And I also don't want to just close the trade out and take more than a 50% loss on this trade right now. I want to give it a little room, a little time to breathe and see what happens in the coming days. So, like I said, I'm a fan of patience. I'll definitely keep track of what happens over the next 2 weeks with this stock. But for now, patience is going to win the day. Oftentimes, patience wins the trade as well. So that's it for the review of last week's trades. We are 2 weeks away from the expiration date for monthly options in January 2025. That even just sounds weird to say. It's going to take me a little while before 2025 just rolls off the tongue. The shortened time frame on these trades, the 2 weeks, makes these trades presented even more risky, but great for education. Now, all trades on today's podcast use the January 17th expiration for monthly options in January. So let's dive in right now. We'll start off as usual with the covered call. I'm looking at Tilray Brands, symbol T as in Tango, L as in Lima, R as in Romeo, Y as in Yankee. The stock ended the week at $1.45 per share. I'm looking at buying stock and selling the January 1.5 call at 16 cents. That could give us a return of 14.48% in 2 weeks. Then you enter this trade by buying shares of stock for $1.45 and concurrently selling the January 1.5 call at 16 cents. This trade makes the most money if stock prices finish above $1.50 per share. The break-even price on this trade is $1.29 per share. In real terms, the stock purchase will require $145 and you'll collect $16 for selling the option. Next up, we have a credit spread on MARA or Mara Holdings, also what used to be called Marathon Digital Holdings. That symbol M as in Mike, A as in Alpha, R as in Romeo, A as in Alpha. The stock ended the week at $19.64 per share. I'm looking at selling the January 18 half put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the January 19 put at $1.06 and concurrently buying the January 18 half put for 90 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $19 per share. The break-even price on this trade is $18.84 per share. In real terms, you'll collect $16 per spread that you sell and have $32 at risk. Our final trade on the week is going to be a debit spread on the iShares Trust 20-plus year Treasury Bond ETF, symbol T as in Tango, L as in Lima, T as in Tango. The stock ended the week at $87.29 per share. I'm looking at buying the January 86 half, 87 call spread for 32 cents. That could give us a maximum gain of 18 cents, or it would be a 56.25% return in 2 weeks. Now you enter this trade by buying the January 86 half call for $1.52 and concurrently selling the January 87 call at $1.20. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $87 per share. The break-even price on this trade is $86.82 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Happy New Year to everyone. Can you believe we are in 2025? It seems like not too long ago, we were talking about partying like it's 1999, and then we were worried about the Y2K event and how the computers were all going to stop working or something like that. Fast forward to 2025, we have all sorts of things happening in the world. There's Bitcoin, there's crazy inflation, there's all sorts of stuff that we probably didn't even imagine was going to come, 25 years ago. But hey, with new year and every new month and every new week and every new day, there's new opportunity. So I hope you grab every opportunity that is within reach that you absolutely want. And if you can't grab it today, figure out how to get a couple steps closer so you can. So put in the work. Thank you for listening to the show. Hope you guys have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.